Welcome to the Planet MicroCap Showcase Virtual 2022. I'm your host, Robert Kraft, and thank you for joining us. Now presenting at our event is Sanjay Singh, Chairman and CEO of Mace. It's a publicly traded company. The symbol is MACE on the OTCQX. And with that, Sanjay, take it away.
Thank you very much, Robert. I'm very excited to be here and talk about Mace Security International and Mace brand. You can read the forward-looking statement disclaimer at your leisure. Mace is a #1 recognized brand in non-lethal personal safety products. Mace is a provider of personal safety and security products and is the owner of Mace brand. Original manufacturer and market leader in the defense spray segment for over 40 years. Markets products through additional well-known brands, namely Vigilant, Tornado, and Takedown brands for alarms and pepper sprays. Distributes its products through retailers, wholesale distributors, independent dealers, e-commerce channels, and its website, www.mace.com. We are located in Cleveland, Ohio. We're a mission-driven company. Our mission statement is provide community and family safety through individual empowerment. Our vision statement is to be the most customer-centric company, providing uniquely better products to keep our customers safe all the time and be the foremost expert in the non-lethal product segment. Now, here's a recap of 2022 through September 30th. Would like to draw your attention to the left-hand box where the heading is Key 2022 Accomplishments and Tailwinds. We restructured the business to yield positive EBITDA in Q3 22. We added additional expertise in the retail sales segment. We also lowered our four-wall costs. We added new products and added a new line of business, a service situational awareness training company. We also increased traffic and conversions on mace.com, and we negotiated a credit line extension a few months ago. On the right-hand side lists the risks and headwinds. Inflation and the threat of economic recession is one of our foremost risks. We've been seeing a slowdown for the last couple of quarters. Labor, just like anyone else, retention, recruiting, and increasing costs. We've seen our share of supply chain issues with equipment, materials, parts, costs. We have seen vendor price increases. And one of the biggest risks is as we are adding new retailers, how to scale the company and organize all our processes so we maintain our levels of efficiency that we have achieved in 2022. And now the results. Q3 revenues increased 26% versus Q2 22. The adjusted EBITDA of $124,000 in Q3 22, or 5% of net sales, versus losses in the prior 3 quarters. We added 4 new retailers this year: Mid-States, Cornwell Tools, Napa, and most recently Dollar General. Our year-to-date plant efficiencies are averaging 137% versus 102% last year. This has offset some of the cost increases that we have seen. Our year-to-date SG&A costs are lower by 29% in Q3 22 versus prior year, excluding one-time costs. We launched a safety training service business in partnership with Legal Heat. We launched new products, the Chameleon, the Pocket Pepper Spray, the Twist Lock, and most recently the F3, which is a mobile pepper spray for vehicles. And sales on mace.com, which is an area of focus for us and has been for the last couple of years, were up 144% versus prior year and up 54% versus Q2 22. This slide shows our Q3 2022 year-to-date financial results. On the right-hand side, you can see the financials. Our net sales was $6.6 million versus 10.5 last year, the same time period. Our gross profit percentage was relatively flat at 39.85 versus 39.16 last year. Our SG&A expenses, and these expenses do include the one-time, were slightly higher than last year because of a one-time severance that was recognized for our given to our CEO. Hence, our adjusted EBITDA for the year through September 30th is a negative 187,000 versus 875,000. To the left, the reason for the declines is about 37% in revenues, where two of our top customers down more than 50%, and sales in our base business, which is our gun stores, independent dealers, smaller regional sporting goods stores, those are down 30%. Our gross margins were just slightly higher than last year, mostly because of labor efficiencies that offset some of our increase in procurement costs, and we also lowered our labor overhead costs. Our adjusted EBITDA was affected by the economic headwinds that we've been seeing for the last 3 quarters. And our SG&A is lower by 400,000 when adjusted for one-time expenses. We like to show this slide to show sort of a succession of, Mace over the years. This slide shows our performance from 19 all the way through the third quarter of 22. I would like to draw your attention to the adjusted EBITDA line. And in 2020, we were at 2.5 million. In 21, we dropped at half the rate. Then our losses began in the fourth quarter of 21, first quarter of 22, second quarter of 22, and then back to being about break even. And then looking at the box below that shows our cash, you can see that we had cash on our balance sheet all the way through 21. In 22, we have not seen that because of the 37% decline in revenues, and hence our debt has increased. And as of the third quarter, we were at $700,000 through a credit line. We have a credit line of $3 million. These are the critical milestones in this chart. Starting on the left, we initiated a restructuring of the company in February 2022. In April 2022, we announced a review of strategic alternatives and an internal reorg. At the same time, we added Cornwell Tools as a new customer. In June, we added Midstage Distributing, a very large retailer in the farm store channel. And then we also launched the Personal Pocket Pepper Spray, which is a bestseller. In August, we extended a credit line agreement. We added Napa, that has 6,000 stores, and we signed a deal to launch a new product for pet owners. In October, we added Dollar General. We announced the completion of restructuring. We also announced a partnership with Legal Heat and F3. And at the same time, we announced positive EBITDA and revenue growth of 26% versus the second quarter of 22. We like to look at this slide as sort of the cadence of penetration in North America. There are 128 million households. There are 5.6 million employer firms in the USA, of which the majority are less than 500 employees. And then there are 209 million plus citizens over the age of 18. And we are targeting an additional $8 to $10 million incremental revenues in the next 24 months. So that's 2023 and 2024 from across all channels. So we are an omni-channel distributor of pepper spray products and personal safety devices. The next slide shows the sales distribution in 2019. You can see that retail was 48%, e-commerce 14%, and private label 27%. Private label was our lowest margin the seller. E-commerce is the highest, and the retail margins average about 45 to 50%. Compare that to 2022, retail has jumped up to 52%. E-commerce is now a much bigger piece of the pie at 36%, while private label has dropped. The engine for the Mace company is add more retailers while funding growth in e-commerce with the cash flow from growth in the retail segment. That's what we did very well in 2020. These are some of our new products that were launched in 2022. On the left is the Chameleon, and this has received a pretty good response in our base business and a couple of local customers like Discount Drug Mart. It's based here in Ohio. It's a 10-foot range pepper spray at a $9.99 price. Then the Pocket Personal Pepper Spray. It's a very unique looking product, and it is certainly very, very popular. And it's been selling very well on our website and at AutoZone. And then we also have the twist locks that are 2-pack at $14.99. There is a general feeling among certain retailers that they like the Mace brand. The brand is recognizable, but the price points are much lower. So we did a full strategic review and decided where we were going to play and decided to offer these types of pricing for those customers. Dollar General is an example. We also added on the left-hand side this mobile pepper spray that looks like a fin, can go on top of a car, and it can also go on top of a commercial vehicle. It's to defend against carjacking, attacks, civil unrest. Just launched, and the price on that is $249 to $299. We're working in partnership with another company called F3. And then Legal Heat is one of the largest trainers in the firearm space, but that is now entering the non-lethal space. We are very excited to partner with them. They have a great technology of how they store their materials, and it's all electronic, and we're really excited. This could be a significant game changer for us. Then the last slide shows our outlook for 2023. And if I can draw your attention to the very first box, it shows our revenues year to date, 6.6 million as of September 30th. We are targeting 12 to 14 million. We'll probably end up around 8 to 9 million in the year. And the growth is being driven by the 4 new retailers that we added this year. We also let the partnership with Legal Heat, plus our new products, and we are assuming current growth trends. That's how we came up with that range. Our EBITDA is, break even in the third quarter, and we're targeting 10 to 15% in 2023. And it currently assumes the current sales and cost trends. So we've looked at our existing organic portfolio of customers and where we are looking to grow and the timing on that. And that's what that range is based on. We added 4 new retailers this year. We're currently working on 3, but we are targeting 5. And the 3, out of the 3, 1 is somewhat imminent. It's got a very high probability of us increasing our business there. It's an existing customer. We assumed no significant deterioration in the economy and foot traffic in stores. Our playbook is if our organic base is slow, add more new. And that's why we brought in an additional resource. Then in terms of a new line of business, we had nothing in 2022. We're targeting $500,000 to $1 million in 2023. And one of the big plays here is that we're making the assumption that retailers are receptive to in-store training. We have spoken to retailers and they are very eager, but whether they actually do it or not remains to be seen. But nonetheless, this platform also will be offered online, webinars, and podcasts. We're also increasing our new product and segments. So we are targeting the outside, the walker, the hiker, a couple of products in that area. We're also targeting a product that is in the school space, and they're very different from our current offerings. And these are all co-branding opportunities. I probably talk to 3 to 4 parties a month. Um, it's a there's a lot of interest, and there are a lot of neat offerings out there, and we have a framework where we decide to co-brand with organizations that align with our values of empowerment. And then we are also looking at our new international and Mace.com sales, which are about $1 million today. We're looking at roughly doubling that. And again, we have assumed current growth trends. Our international sales have increased substantially this year. So, in summary, we're designing a custom approach for new retailers in our pipeline. We're segmenting these retailers by what their core competencies are and how we can address their issues. We do need to design and deploy training programs with legal heat. We are also have to design and deploy innovative co-branded partnerships that solve a significant problem. And we are continuing to develop and deploy direct-to-consumer and international sales expansion. This is one of the areas that if the company had a lot more capital on its balance sheet, this could be, on overdrive, but sadly we don't. So all our retail growth is what funds some of the e-commerce marketing spend. And that's a wrap. Thank you very much for your participation and attention.
All right. Well, thank you very much, Sanjay, for your presentation here today. So a few questions that I wanted to run by you. And, first question is, I mean, look, I've known Mace for a while. I think everybody watching and listening in, knows Mace. It has that Kleenex kind of vibe to it, right? For pepper spray. So, in your opinion, why, if the brand is this well known, why isn't the company more well known at this stage, in fairness?
There are 3 reasons why, just in my humble opinion, having been associated with Mace at the board level and then as part of management, the company is undercapitalized. It doesn't have, $15-20 million on its balance sheet to deploy for marketing. There are many times that people say that they didn't realize that you could buy pepper spray in a store, not just Mace, just any kind of pepper spray. They associated that with law enforcement. So it all speaks to a lack of, the appropriate level of awareness, whether it's through blogs, social media, and just general marketing. The second is, I think, the idea that, if you slap the Mace name onto something, it'll sell really well. And we realize that did not, in hindsight, we realize that doesn't work. You have to solve a very specific problem. The Mace brand is recognizable. It's 4x more recognizable than any of the other brands. Although some of our competitors are bigger than us, but and they're able to do that through law enforcement or just general retail. We also have stayed away until recently with some of the high volume retailers like Dollar General, or we haven't been able to crack the code on that. We worked on that particular customer for a couple of years until we redid our strategy, and we clearly decided that we were going to play in that sector. So those are the, three main reasons. And the last one that I would add is, Mace is a very recognizable brand name, and with it comes huge expectations, like you said. We're a small company. There are two people, maybe three, at the beginning of the year that were actually working on the business. I mean, our management team is pretty small, so we have a lot of tactical doers, but we've got this big brand name, which is why we decided to outsource our marketing expertise so that let the experts sort of tell us what to do, what works. We did that on Mace.com. We did that on Amazon. But you look at whether it's attending, investor conferences, board meetings, quarterly earnings. A lot of the private companies don't have to deal with that. It's a reality. It comes with the territory. And I think when the gains start happening, being a public company will really, increase the valuation of the company. And that's what we're aligned as a team. We've got a very talented, passionate team that is very eager to, like you said, really make the brand name even more recognizable. So we are transitioning not just from being a pepper spray company to an expert in the personal protection device. That is really important in terms of having that platform. And then one last thing I would add is we have also partnered with not-for-profits every month to advance their cause for the last 2.5 years. It could be a drive to purchase socks or toothpaste for the local city mission of Cleveland, to maybe donating some alarms to a women's shelter. We get a lot of calls from people now nationally. At first it was a slow start, and that also has put our name out there as a company that does live its empowerment in the community mission.
Got it. Thank you for that, Sanjay. So I guess, is the strategy really okay? We have our new direction. We just went through this whole, transformation, reorganization, right? And so it's okay. So 2023 is our year to prove out the new model, right? Potentially, if let's say it proves out or exceeds expectations, hopefully that results in some appreciation in the stock price. And then is that when the company is going to start to evaluate, all right, we've been saying we've been undercapitalized for a while, maybe it's time to capitalize. Is that kind of the thought process?
It may be. We have independent
From
board
what
members.
I should have said, from what you can tell us, of course.
Yeah, we have independent board members that have different views, and I think at the moment we have a lot of momentum. I mean, it's been a long time since we added 4 new retailers, and that speaks to the efforts of our team. And then we're looking at, like I showed in my deck, another 4 to 5. Look, if we added another 4 to 5 retailers and those sales sort of materialized, I mean, you're looking at roughly doubling the company in 15 months. I mean, that would change our EBITDA from a 10 to 15% rate to more like a 20 to 25% rate, and it would cash flow very well. But we need that execution, for the next 24 months, heads down, and really make a huge difference in the bottom line of the company and the top line.
Of course. So then another question that I have for you today, and this is I'm asking to all the companies that are presenting, we are in tough markets right now. What are some of the measures that the company is taking in order to mitigate some of those macroeconomic pressures that are affecting most microcap companies across the board?
So those are the things that we did in the first and second quarter. That's the milestone. We lowered costs. We decided to add new business. We increased our efficiencies. We targeted that. So those are the ways we are. I mean, with a 37% drop, our gross margins actually went up a little bit. I mean, that's pretty good for that kind of a drop. And Now, we also increased prices in some instances. It's a cost cutting, it's a revenue generation, and we added all these new products. So the sales guys have no reason not to be able to go with new offerings to our existing customers or new customers.
Very good. All right. Well, Sanjay, I think those are all my questions I had for you today. Thank you again so much for participating, answering my questions. And to everybody watching and listening in, thank you. Enjoy the rest of your event. And Sanjay, thank you again.
Thank you very much, Robert. Have a great night.
You too.